Hey guys, Oliver here with Zen Crypto. Today, let's take a look at these charts and see what's going on in the markets, right? As you can see, let's just go right for it. So, back in our last video, I was calling a potential bottom here. I thought there was more buying strength in the market and we were going to hold our Fibonacci line here of the 382. Unfortunately, that is not the case. So as you can see, I was hoping that we would bounce off the 50 and that would work as support. However, we plunged deeper down into the abyss, and now we're on a relief bounce of about 3% from the bottom. Just over 3% now on the relief bounce, and that is where we're at. Now, I did want to share something that I saw on Twitter that I find really interesting, and that is this Justin Mammey's sentiment cycle. Now, I, like you, have probably never heard of this. However, it is worth looking at because it is playing out textbook. Back here from the beginning, several days ago, we have the returning confidence, this overenthusiasm. You see now we drop down into this subtle warning and disbelief phase where we think, oh, it's going to just rally higher. We have the plunge right here. This is this little consolidation here, the sign of weakness. We drop down, we had our panic dump below the 200-day moving average, just like here. We have the panic dump, we have the bounce, we have the plunge down now into discouragement, which you can see here, playing out like a fiddle. I'll move myself to the other side. You see some accumulation happening here, and now we're had the wall of worry where we had this rally. People are saying this is the exit liquidity rally. I'm not sure. We tapped the 200-day moving average, which is showing itself to be this anxiety line. And now we've had this pretty sharp sell-off of about 18% and to what now looks to be the aversion phase. If this plays out like it has been to the textbook T, we have the aversion now, and we should rally into the 200, hit this little space of denial where people don't really know what's going on. And you see this is a pretty sharp incline in price, which would rocket us back up towards 50K and beyond. That is the hopeful in me. Now, you might be wondering, well, why should we listen to this Justin Mammey sentiment cycle? I've never heard of it. Well, to be honest, I never heard of it either until I saw this yesterday on Twitter. Now, it is worth looking at something previously that I had never heard of, and that was this Wyckoff distribution. This chart pattern played out textbook with Bitcoin back in last May and April of 2021, where you have the buying climax, you have the resistance, you have a bit of a sell-off, and then you have what's called the up thrust, which is this weekend thrust up to new all-time high. But then you can see it gets quickly rejected, and then it bounces a little bit sideways, it retests the area, and then it plunges to a sign of weakness and then drops down into the abyss, which I will now show you. This is Bitcoin in 2021. We had this rally, we had the up thrust event here where we peaked to 65K. It was a rather weak breakout to the upside, rejection, boom, the consolidation. Here's the sign of weakness that I showed you, and then the plunge into the abyss. So just because we've never heard of these distribution model like the Wyckoff or this, I don't even know the name, the Justin Mammey sentiment cycle, it does not mean it is not something that could potentially play out and something to keep an eye on. Now, enough with the technicals, but my favorite quote is, "Show me the charts and I'll tell you the news." I believe that the technicals will always lead the news. We see the charts have the price action movement, and then all the news and fundamentals come behind it. So now let's take a look at the fundamentals. This is Bernard Baruch, famous investor. Let's look at the crypto fear and greed index. This is something nice to take a look at. You can see last week, even though we've been having our rally, we never really went into the greed side of the spectrum. This chart, if you're not familiar with it, it measures a number of things, from the technicals also to the sentiment on Twitter and other places, news sources, etc. And now you can see we plunged back into extreme fear. So there is a lot of fear in the markets right now. People calling for the abyss, Bitcoin's dead. you know, the standard classic narrative of Bitcoin's going to die and it's all over, doom and gloom, recession's going to kill Bitcoin and kill crypto and it's all done. However, I think there's a different picture at play here. Something to be aware of also is tax season is upon us, with April 15th being the deadline in the United States. So there is a significant amount of wealth that gets taken out of the markets in order to cover their taxes, as well as maybe capture some capital loss. Different reasons why people leave the market before tax season, but there it is, something to be aware of. This is something I found interesting. The Bank of America warns of dire recession, like I see cryptos rocketing to new highs. So what we're seeing, the so-called experts in the legacy markets, they're calling for a recession with quantitative tightening. But what I find interesting is what they don't call for is crypto and Bitcoin more specifically to plunge with the stock market. Now, Bitcoin has been trading highly correlated to the S&P 500 pretty much for all of this year, and even previously as the bull has raged, it's been more or less highly correlated to the stock market. But we're starting to see a call for a decoupling, which would fulfill the narrative that Bitcoin is in fact a hard asset and an inflation hedge. The narrative as digital gold would hold true if we see the decoupling and the stock markets plunge while Bitcoin rallies higher to all-time highs and beyond. So that's something to keep an eye on. Obviously, I am in the camp of go crypto. If the recession happens, I'm all for the Bitcoin rally and believe crypto to be a life raft from the burning legacy economic system. You know, that's my personal take. And one last little bit of news. This is just a quick market update, guys. Ethereum launches its first mainnet shadow fork in preparation for the merge. The shadow fork puts developers' assumptions about the existing mainnet and testnets through a stress test. Not really much to show here other than it's just Ethereum 2.0 chugging along at full steam, preparing for the merge later this year. So exciting times ahead for Ethereum. And to take a quick look at the ETH BTC chart, it still looks nasty in the best possible way of the word. You can see here this nice ascending triangle building up here. We had the breakout before, or the attempted breakout and rejection, and now we're just getting ready. Really the defining line here is this 8 million Satoshi line. I like to look at the Ethereum Bitcoin chart because for me, I'm trading against the Bitcoin pair, which I'm going to do a full video on trading strategy and how to actually know if you're profiting and what you're trading against. Are you trading in dollars? Are you trading in Bitcoin? Are you trading in Ethereum? It's a whole number of things to look at when you're trading and to see how you're best profitable. That's it, guys. If you liked the video, I do encourage you to like it, maybe drop a comment, share your feedback, and if you enjoy the channel, the news, my style, give me a subscribe, and I'll catch up with you next time. Ciao.